Peter Eliades with you. This is Stock Market Cycles update for the week ending Friday, February 28th. And we had Labor Day. We had Leap Year Day yesterday, February 29th. Pity those that are born on that day, or maybe feel good for them. They only age a year every 4 years. And today, of course, I'm doing the recording on March number 1. The recording is beginning around 6:25 p.m. Pacific time. Probably go online within the next 20-30 minutes. Anyway, we have a lot to talk about. I want to emphasize once again my reason for doing these updates. My only reason for doing them is to show you the power of the cycle projection software. If you've been watching virtually every day for the past 2 months or the last month, and you haven't been astounded by the accuracy and the abilities of this software, then you don't have too much experience with the stock market. It picked the top virtually exactly, along with a little help from some technical lines for some trend lines, but it virtually picked the top exactly and has been pinpointing the moves to the downside. So that's where we stand coming into this weekend and going into tomorrow's opening on Monday. Let's take a look at some charts. They always tell the story. We're going to start with the Dow Jones Industrial Average, and this is a nominal 40-week projection with a 20-week offset. These two offsets are 96.8 and 110.6 is the red one. Okay, so I'll click on the projection bar and you'll see the projections call for a close on the Dow nominal 40-week projection between 22,605.82 and 24,742.74. Now those are confirmed projections. We have moved below both those lines. Does not mean you go straight down to those projections. We could panic for another few days and get in that window, but that we don't know that from the projections. We just know there's a high probability now of getting into this projection box. We can't tell you we won't have a rally of 50, 100, maybe 400 or 500 Dow points. This level up here we could rally up to in a few days and not invalidate. That's at 26,554. So that's like 1,100 points higher than we are now. You could see that kind of rally and not invalidate the downside projections. Let's look at the next line. By the way, these projections are confirmed. Again, both lines have been surpassed. But let's look at the next longer term offsets, which are 189 to 194. That's 39-week offset for the nominal 78 to 80-week projections. I should say 39 to 40-week offset for nominal 78 to 80-week projections. Look at this. If we get a little further down in the Dow over the next few days, we're going to have a minimum projection down to this level, 22,203. That's 3,200 points lower, my friends. Now, I don't want to get you bears overly excited. That has not been confirmed as yet. You need to get below both projection lines to confirm that projection. But the preliminary projection has been given down to this level of 22,203. We could actually get a projection lower than that should we move down below in the next couple of days. So that's something that's worth watching closely. Okay, that's from the Dow. Now we want to take a look at the S&P 500. And we're going to start with the S&P 500 on this chart right here. This is a 20-week offset for a nominal 40-week projection. Look at this. Look at this. That almost got hit on Friday. The projection called for 29.5108 at least on a minimal basis, and we closed at 29.5422, 3 points away from the projected level. So when you see a chart like this, you've got to be careful with your bearishness, because we can argue, if we want to be bullish, that this projection was met and that we're perhaps due for some kind of rally. The lower side of that projection, 28.4593, rounded off. Let's take a look on the S&P at the next longer offset. And this is the 96.8 to 110.6. This one is perhaps a lot more interesting. Look what we see here. This is Friday's action, closing right down where this light blue line is. If we had closed just a little bit lower on Friday, we would have confirmed a downside projection to significantly lower levels. As it stands, by going below the dark blue line, we got a preliminary projection down to 26.2743 on the S&P cash on a closing basis. Now, that projection was not confirmed. We need to see a close below this red line over the next few days. I wrote something down here. The S&P gives an excuse for a rally from here because it basically met the projection we showed you just before this. But much lower projections would be confirmed with any sideways to down close tomorrow. Can you see that? If you can't see it, let me zoom in and show that to you. So we're going to zoom in on this area right here. This light blue line is where we closed on Friday. Let's go over one more day. This is one more day. It needs to close above 29.68 tomorrow. Now, that's not that far above us. That's 14 points. If it can do that, then it can hold off confirming a significantly lower downside projection. In fact, if on Monday it can close above the 29.95 level, let's say, 29.95, 3,000, then it will, again, do away with this significantly lower projection, at least for the time being. So we're in a very important area for both the Dow and the S&P. And this, by the way, if we do confirm this projection, that calls for a move down to at least 26.2743. That's another 11% down from Friday's close. Again, that projection has not been confirmed. That shows you the potential. I'm really aggravated at TradeStation because I wanted to show you the New York Composite Index, which tends to generate the most accurate projections. And all of a sudden, when you put $NYA.X in TradeStation, it tells you unknown symbol. It really aggravates me. So I'm going to find out tomorrow what's going on. I don't think they've done away with the New York Composite Index. Okay, that's it for now. Thanks for watching. If you have not subscribed as yet, bottom right, click on the red banner to subscribe. Once you've done that, click on the bell that'll notify you anytime we do a new update. Again, thank you for watching. We'll talk to you tomorrow.